Alright, hello everyone, and welcome back to the Daily Update of 1000 Day Challenge. Just doing a very quick update today. Today is the 2nd of December itself. So overall, in terms of the overall market itself, we do see some sign of a slight shift for potential bullish to slightly neutral to a little bit bearish kind of sentiment, especially in terms of the S&P 500 Nasdaq. And yeah, S&P and S&P, so the US equity market in general itself, we do see potential shift. So you can see we have a red bearish candlestick along the resistance line over here, and this is the resistance that we are seeing in that sense. And then over if you're looking at Nasdaq wise, not so much of a clear. If we do draw a similar line wise, which is from here, we still have some sort of a gap up in that sense, but bear in mind this is still technically forming somewhat like a rising bearish wedge. Like what I mentioned, if we do break decisively below 20 exponential moving average and below this support, that will give the confirmation sign that this formation of the rising bearish wedge is completed. And then the drop will be tentatively near towards the bottom over here for potential for bottom or even a much lower low. But generally speaking, I do think that this could be a double bottom and a worst case scenario itself. All right, but let's see how things goes. Over in terms of the ASHIK, where we slightly still similarly forming somewhat like a rising bearish wedge, but bear in mind that even for rising bearish wedge to fulfill the prophecy by itself, we still need it to break the kind of rising trend line itself, which at the moment it did not. But it's a matter of time that it will. The question is, even if it does fall, how long of a gap do we have? So the question is from the low to the high, how big of a range do we get? Because the larger the range, it means that the more we could fall while still dropping a very decent amount, which comes in terms of a Fibonacci retracement level wise, which is in terms of percentage level wise from the high to the low. So if we form a very short kind of a rising bearish wedge, then the range that we fall will be very low. But if we do form from here to the upwards kind of a, if we do hit over here around $30, we do have a very decent range itself, in which case we will form somewhat like this. Over like this. So even if we do form a drop below the rising bearish wedge, we could find somewhat like a support over the $26 level region itself, $26, $27 region itself, and finding support over there will still tentatively be a really good sign. So that's the way to look into it. And then finally for KWAVE itself, we are still spiking towards upside, but bear in mind that over here we have a lot of overhead resistance over here, and right now over here as well. So I wouldn't say that it's very unlikely that we could actually break above both these 200 simple moving average on the daily chart and also 200 exponential moving average on the daily chart with just a simple push. So I do think that it's more likely to consolidate over here or even have some retracement towards the downside. In either case, it will still be a tentatively bullish to neutral sign because unless we break strongly below this 20 exponential moving average, then definitely I do think that there is momentum to go further up in that sense. All right, and then finally for Bitcoin itself, we do see a red bearish candlestick, but we tentatively found some support near the 20 exponential moving average. And right now, we don't seem to be finding support over here. And it's kind of a little bit expected. Reason being, like what I mentioned, since the very first sharp distance drop itself, it's very unlikely for our first retest to break above and stay above in that sense. It's generally more likely to form somewhat like a false break kind of setup, like what we're seeing over here. And then we do consolidate over here, but that's not to say that it's the best place to short, which you could. I mean, technically, you could go for a short over here, but other than that, what I would prefer to do is wait for euro consolidation itself because we are seeing potential shift of momentum in terms of traditional financial market. So that could also lead to a potential shift of momentum for Bitcoin itself or crypto in general. So that's something to be cautious about. And overall, if you look in terms of the grand scale of things, we are definitely showing potential signs of support. So similarly, these are very good signs of support you see over here and over here. Even though it's a much lower price, we do see a very nice bullish divergence sign over here in terms of MACD or the histogram itself, and also in terms of momentum itself, which is the signal line and the MACD line itself, both showing signs of a bullish divergence, which is definitely signs of potential hidden strength in that sense. All right, with that said, I've come to the end of today. If you guys have any questions, feel free to drop by your comments below. I'll see you guys tomorrow. Take care. Bye-bye.